What's up, guys? We have a new stock purchase. I've been talking about, wanting to add a stock since I've had the YouTube channel, so I could kind of walk you guys through what that looks like in real time rather than just speaking on it. And I am excited to announce we have finally done it. If you guys have been with the channel, you can probably guess what stock that is. My favorite candy is Reese's, and the stock we added, guys, is Hershey's. Side note, I've been eating these Reese's peanut butter chips and putting them in brownies, and they are amazing. So, I definitely enjoy a lot of Hershey's products, but let's get into it, guys. Today, we're going to review a few things, and I'm going to walk you guys through where my head's at with this one and why I decided to purchase it. Again, we've spoke on this stock in previous videos, but now that I finally pulled the trigger, I think it is appropriate to revisit it and kind of lay all the thoughts out in one video, and hopefully, this can be a good learning experience. I'm not telling you to go and buy Hershey, but, I did. So for what that's worth. So here we go, guys. I only have 2 shares right now at a cost basis of $183.57. I made that purchase yesterday. Today's Tuesday, June 18th. And I want to walk through a few things. Starting off, guys, I talk about it all the time on this channel. And it's this, okay? This isn't a perfect graph to drive the point home, because this is as of, 2021 data, and it's companies in the United States, and we obviously know Hershey's kind of a global beast. But I like to buy companies with a wide economic moat, and I'd say Hershey's economic moat comes from consumer preferences. I mean, I would venture to guess a lot of your guys' favorite candy is a Hershey product, and if you like a candy, if it's your favorite, you don't want to switch to another brand. You don't want an off-brand, guys. I love Aldi, but, I can't do an Aldi brand peanut butter cup if my choice is that, or, the Hershey Reese's cup. So let's look at the market share of the leading chocolate companies in the United States as of 2021, guys. Hershey had a 34% market share in 2021. Following behind it was Mars at 26.1, and then Lindt. Chocolat Fabricain Lindt is. I'm not even gonna, pronounce this, but this is a German one. Ferrero Rocher and related parties 8%. Nestle, 3.7, and then private label just under 2. All other, okay? So pretty much Hershey is the biggest chocolate company, guys. They have that wide economic moat. It's brought to them through consumer preferences, and to be quite honest, chocolate enjoyers just don't want to switch the brand, and that's where the moat comes from. Let's not spend too much time talking about the obvious, guys. The next point I want to get into, and again, we have visited this before, guys, but this is a huge sell point for me on Hershey, and it's kind of what I'm going to call an arbitrage against cocoa prices, okay? So, we've talked about it here, but let's review. There's been a cocoa shortage. Okay, it's been brought on by a few different crop diseases, I guess, and kind of the African farms that produce cocoa beans. It's also been brought on by, global warming. There's been, extra hot summers, and it's been kind of tough for these cocoa crops to grow, in the same supply that they have been. So, what happens when the supply for a commodity decreases and the demand remains similar or increases, guys? That commodity's price goes up. Obviously, we have seen cocoa hit all-time highs in April of this year. Cocoa prices hit an all-time high, guys. We can even look at like the 50-year chart, and it's, it's way higher than it's ever been. But we'll go back to the 1 year. So when we see something like this with a main input for chocolate, okay, cocoa, that's probably the main input in chocolate. What do we expect to happen to Hershey's cost of goods sold, right? We expect their cost of goods sold to rise with cocoa prices because Hershey's having to buy cocoa and then, make it into their chocolate that we all love and know. And here's where the arbitrage comes in, okay? Stay with me here. I hope I'm not overcomplicating this. We have seen Hershey in the trailing 12 months hit record net income. Okay, so how is it that Hershey can hit record net income while their main input into their cost of goods sold is hitting, record highs? Does that make sense? So while their inputs are getting more expensive, Hershey is still able to, find the best bottom line they've ever found. Okay, does that make sense? And that's really attractive to me because what this says to me is, we'll go to this 10-year or 25-year. What this says to me is, when cocoa is, I guess, less of an in-demand commodity, when a lot of these, farms are able to kind of catch up with demand for cocoa and cocoa prices do eventually come down, that's going to be very, very favorable for Hershey because essentially in this chocolate market, guys, it's the toughest it's ever been to find net income, but Hershey's been able to do it, okay? So that's what I mean when I say arbitrage against cocoa prices. I don't know if that's like the best way to say it, but that's the point I'm trying to make is if Hershey can survive and not only survive, but thrive, in this kind of cocoa environment, what's going to happen here in the next 5-10 years when cocoa prices do correct to kind of their more historical levels, okay? It's going to bolster their net income and free cash flow even more. And, that brings me into my next point of Hershey, and it's that it's kind of been a free cash flow beast. Again, you guys might be tired of hearing me talk about some of this stuff, but free cash flow per share is a metric I like to use because it has to support, the dividend. Okay, dividends are paid out of free cash flow, and that's how we kind of measure, okay, how sustainable is this dividend, guys? We see here December 2019, $6.90 in free cash flow per share. Trailing 12 months, only $6.50. But, it seems like there's somewhat of an uptrend. I don't want to get hung up on that. So let's say in the past 5 years, Hershey's free cash flow per share has been between $6 and $9. Okay, that free cash flow has to support, their forward payout of under $5.50 per share. Okay, and it's done that every single year, even on the worst years, for the trailing 5 years. And what that says to me is Hershey has a sustainable dividend, but not only that, it has room to grow that dividend. And if we do see cocoa prices come down, we're also going to see, most likely, Hershey is going to continue kind of this aggressive dividend growth track record. Okay, so now we're on the dividend summary slide. Guys, I locked in my starting yield on this one at a 3% starting yield. A little lower than I'm usually comfortable with, but again, I'm taking the correct lens to this stock, and I'm okay locking in that 3%, because of their potential to continue growing that dividend. And I am probably looking for some capital appreciation as well, guys. Okay. One other point I want to visit, and I know I've probably mentioned this before, but I guess I I have my methods, and it's what I think about. Okay, guys, Hershey's dividend growth track record is 14 years. Okay, they didn't pay a dividend before that. They started their dividend, and now they've paid it for 14 years and counting. And I think in a previous video, we compared that to kind of the J&J example. Let's go ahead and do that again in case you guys weren't here. So let's look at this. 3% dividend yield. What's their 5-year growth rate of that dividend, guys? It's 12.15. Obviously, that is well outperformed most of these guys we see. And their track record is 14 years. Let's go to J&J now, okay? And the reason why I want to make this comparison is I don't want you guys to get so caught up in track record, okay? Because if you can get in one of these guys like Hershey that's been growing the dividend for 14 years, you know, what happens the next 10, 20, 30 years? My point is that a lot of times that dividend growth is a lot more aggressive in kind of the early years than it will be with something like J&J. Okay, so the dividend growth here for J&J is 61 years, guys. Okay, so this is obviously one of the longer track records in terms of dividend stocks. Okay, do we understand that? However, their 5-year growth rate is 5.67%. Okay, so the trade-off here is you do have a longer track record, but, you know, they've supported that track record because they're a more mature company and they've slowed down kind of that growth rate. They simply don't have the free cash flow they did, you know, 45 years ago when they were kind of starting this track record, I should say. Okay, does that make sense, guys? And the last thing I really want to cover, again, I don't think we touched on all bases, but we're going to talk a lot about Hershey on this channel in the future. And it's this, guys. We are going to look at technicals. Again, as dividend growth investors, I don't know how popular it is for some of you guys to kind of get caught up in the technicals of things, and that's certainly not what I'm doing. However, I do think it is kind of an important point to make, to take kind of a full picture. Again, I'm not using any of these points in isolation, guys. I'm kind of using a collaboration of all these sell points to, you know, build my conviction in this one. And here is the Hershey chart on a max time frame, each candle representing 1 week of price action. And as you can see, guys, this green line here is the 200-week simple moving average, or SMA. This blue line is the 50-week SMA. And I had identified previously, anytime we've seen kind of this 50 SMA dip kind of below that 200 SMA, it usually has represented kind of a shorter term dip, a shorter term buying opportunity. We do see that same thing now. I'm not going to get on here and say Hershey can't go lower, but, you know, I'm just showing you guys what I see. There's one other point I want to point out, at least from a technical basis. And what do we see, I guess, from September 2023 until, you know, present day? What do we see in Hershey? We kind of see consolidation, okay? It's pretty much traded sideways, and it hasn't necessarily made a trend and stuck within that trend. So with that being said, a lot of times these consolidation periods like we're seeing right now can come before a reversal, okay? So I guess my point is I'm trying to build out this position in the consolidation, hopefully get enough shares to, I guess, be happy, be proud of myself, and then by the time I'm done building this position out, you know, it will complete the reversal and it will start heading towards those all-time highs. Again, there's a lot of factors at play here. Obviously, it's going to take, you know, it's going to take some time for cocoa prices to correct a little bit and I don't specifically have a time frame on that. I'm not a East African farmer, but I do think it will happen. In the meantime, I'm going to focus on building out this position, hopefully locking in a cost basis around the 180 mark. Again, I spoke on that yield not being quite as attractive as I usually look for, but I'd be comfortable with 180 to 190 share purchases. It's just going to be a matter of, okay, how much capital can I afford to invest in this one? We will have to wait and see, guys. I'm excited to announce this new position, and thank you guys so much for supporting the channel. It's been really great lately. We broke the 300 subscriber mark. Now we're, on pace to 350. By the time this comes out on July 1st, we might be at 350. If you guys are not yet subscribed, please hit that button. Again, I'm Cashflow Cart. I post videos every Monday night at 6 p.m. and we talk about this dividend growth investing game. I'm super excited to share my journey with you guys, and I'd love to hear, any questions, comments, or concerns you may have. Everyone take care, and let's build wealth. I'll see you in the next one.